and welcome to the Money Show. I'm Kavita Thapliyal, and this show is your go-to guide for making sense of your money, from smart investing and savings tips to understanding the latest market trends and economic news. We break it down in simple, actionable steps so you can take control of your financial future. All you have to do is just stay with us as we explore how your money can work harder for you today and tomorrow. And before I begin the show, let's also quickly flash our WhatsApp number, where in case if you want to get your portfolio aligned with your financial goals, our experts can be of help. So send across your questions on our WhatsApp number and our email ID, and we can help you align all your financial goals with your current strategies. But today, let's put the spotlight on crypto. Bitcoin has slid sharply below $65,000 as investors digest fresh economic or macroeconomic volatility tied to US trade policies, and especially Bitcoin has gone down more than 40% from its October's record high. Now, what is happening? According to a lot of market reports, the drop comes after President Donald Trump announced an increase in global tariff, raising the temporary rate from roughly 10% to 15%. The move follows a recent US Supreme Court ruling that struck down much of Trump's earlier tariff authority, prompting a fresh uncertainty about US trade policies and economic outlook. Now, the tariff escalation rattled global markets over the weekend, triggering a risk-off mood among investors. Now, as a result, we've seen Bitcoin falling more than 5%, dipping below $65,000, its lowest in weeks. Traders moved out of risky assets. Now, US stock futures and the US dollar weakened, signaling broader market unease, and safe haven assets like gold climbed, definitely reflecting a shift towards defensive positioning. Now, analysts say the reaction underscores how closely crypto markets are tracking macro policy developments, particularly around trade and fiscal uncertainty. Now, with the Supreme Court's decision limiting unilateral tariff action and Trump immediately countering with new levies, traders are wrestling with unclear signals on global trade, economic growth, and inflation risk. Now, all of which are driving volatility across stocks, currencies, and cryptocurrencies alike. Now, let's just understand and let's just decode all of this as to what's happening and what it means for you if in case you're holding crypto, and especially Bitcoin. We are joined by Edul Patel of mudrex. Edul, hi. Welcome to the show. So a new low from Bitcoin. It's trading below $65,000 after 15% tariff announcement. Now, just wanted to understand first how much of this move is purely macro-driven versus crypto-specific weakness, because after the October high, we've been seeing, Bitcoin sliding more than 40% now.
Hi, Kavita. Thanks for having me here. So we've actually seen crypto, or rather, I would rather focus on Bitcoin only. Bitcoin dropped by about 45% from their all-time highs of about $127,000 that happened in October. Most of this weakness is just generally cyclical, and that's what we saw early on when, around November, December, and then earlier in the year, it fell and settled somewhere in the range between 69 to 66,000. And then it continued its accumulation phase, which is where Bitcoin has been until this weekend, when the fresh, I would say, tariff uncertainty has just escalated to a whole new level. This has led to just a broader risk of sentiment, and a lot of this risk of sentiment has been triggered fresh in the morning or in the last few hours or so, primarily because of the Asian markets. The Asian markets have just opened back from the Chinese or the Lunar New Year holidays, and then along with that, this additional US tariff uncertainty has led to just a broader risk of sentiment, and that's what we are seeing here right now.
Right, but then you know what, it'll with the US Supreme Court striking down the earlier tariffs and fresh ones being announced. Now, are we entering a prolonged policy uncertainty phase that could keep risk assets like crypto under pressure? Is that likely to happen?
It is very likely to happen, Kavita. In fact, we are seeing this not only, like, I would not say that this is a new tariff uncertainty regime. We've been in this uncertainty regime since quite some time now. And as this uncertainty continues to widen, as we're seeing with the power struggle that's happening effectively between the Supreme Court and the President of the US, the policy uncertainty is leading to more risk of sentiment, because the thing that it's doing is that it's just taking or keeping everyone from placing their bets. And people would rather just hold cash in a period like this right now. Like, for example, in the morning today, The Nikkei index is down by about 1.3, 1.4%, roughly the same range. Bitcoin has fallen by. We expect to see similar trends in the rest of the world as well as rest of the markets.
What's the immediate lower level support that you are looking on Bitcoin coming up?
We've been tracking, and actually over the last month and a half or so, we've started to see broadly an accumulation phase happening. So there are crypto wallet addresses as well as crypto companies who continue to buy and accumulate crypto assets when they reach lower levels. Right now, we are seeing a lot of that accumulation happen across both Bitcoin and Ethereum. We expect that there is still some weakness, and Bitcoin might fall to about $60,000 levels. But I think that's where it will just consolidate and rebound back towards much higher highs as we reach towards April and May.
Let's just also discuss the ETF outflows. They've been added to selling pressure, obviously. Are we selling institutional money pulling back from Bitcoin, or is this more tactical profit booking right now?
What we've seen, Kavita, is actually more profit booking, because if you look at the institutional outflows in terms of dollar amounts, total excuse me, total 63 billion has moved into Bitcoin ETFs, but only about 6-7 billion have moved out in the last 6-7 months. So what we are seeing is broadly just profit booking, and not any structural weakness in the long-term trend of ETF investing. In fact, we are seeing companies like Metaplanet, companies like Strategy double down on their Bitcoin investments and just continue to accumulate more Bitcoin so that their average buying price goes up.
One technical question, maybe you might want to simplify, because this is something, a data that we have also researched. On-chain data shows whales accumulating near 230,000 BTC over 3 months. Does this signal smart money positioning ahead of a rebound?
No, broadly. So typically what happens is that Bitcoin and most assets go through these cyclical phases. And and accumulation is a period that begins when things are closer to the end of a down market, closer to the end of a bear market, right? We think that we are right now squarely in the middle of a bear market, with there being some amount of more structural weakness where we might expect Bitcoin to fall closer to the 60,000 levels. But the signs that we are seeing are early signs of accumulation initiating, which is where we are seeing a lot of wallet addresses, and wallet address is nothing but accounts. And on-chain data means that activity on that account is publicly available and visible to everyone. So what we are starting to see is that these wallets, which are effectively publicly visible to most people, have started to see accumulation of crypto assets. So it's broadly signaling that we are closer to the end, and we expect that there is just a little bit amount of weakness left. In fact, most of us were predicting that it will settle down in the 62, 63,000 range and then bounce back up. But now this fresh tariff uncertainty has put some of that calculus to risk.
Okay, but then Bitcoin is said to be the least volatile as compared to the other crypto tokens. Now, let's also discuss Ethereum and Solana. What's the immediate support level over there, and the fall? Can it be more deeper than Bitcoin?
The fall for Ethereum and Solana both can definitely be more deeper in Bitcoin. Bitcoin is rather the bluest of the blue chips in the crypto spectrum, and Ethereum and Solana closely follow. But in both of those cases, we are seeing that roughly about 20-25% correction further from where we are right now is completely likely and completely possible, depending on where things are going. Like, just if you talk about today, Ethereum has dipped significantly more than Bitcoin has, so has Solana. And this typically always tends to happen in these spiky market movement times.
Right. So, how should retail investors interpret now this divergence? How can we understand, and, people who are in losses, who just waited even after seeing the latest high in October, they are in deep losses now. What should be their strategy?
So I think whenever you're investing in an asset like Bitcoin, it is like literally like investing in a young startup, right? Like when you're investing in an Ethereum, when you're investing in a Solana or a Ripple, right? It's like investing in a young company, a young startup that will, of course, naturally go through these cycles of volatility. None of the gains are permanent. The upside is never permanent, and neither is the downside. So the approach should be of thoughtful long-term investing and thoughtful long-term wealth creation. I personally have been doing an SIP in Bitcoin over the last 3 years, right? And that has seen these entire cycles move through, and that SIP still continues. So if you are investing in crypto assets, the approach should have always been think of it from a long-term perspective and continue to do recurring regular investments so that you can accumulate and create wealth in the longer run. Crypto is volatile. We all understand that the acceptance is growing world over, but that doesn't mean that the acceptance is immune from the price shocks.
Right, and definitely one cannot have all their money in crypto. That's going to be a very big flaw in your financial planning if one is planning to do that. So, so what happens usually during these time is that, because people have seen losses, even the SIP investors, because we see this kind of a behavior across asset classes. When equity crashes, people just stop investing or maybe just put a break on their SIPs. So what's the understanding of continuing your SIPs even at these lower levels?
It's so interesting, Kavita, that when markets crash and people's portfolios are in the red, people stop SIPs, which actually helps them lower their average price. Effectively, if you're not investing in an SIP, it's like saying that you don't want to invest in this anymore, which means that you would rather be risk off. And to do that fully, what you should actually be doing is exiting your positions. But people don't want to exit their positions because that means that they will realize a loss. And loss realization is this psychological thing that none of us want to do, right? None of us want to realize our losses. And which is why what people just tend to choose is that they stop investing. Uh, Whereas in reality, you should be doing the exact opposite. Like what you should be doing is that if you've chosen an asset and a strategy from a long-term investing perspective over a long-term horizon, it's periods like these when you should continue to invest in your SIP because that's the discipline of an SIP that helps you create long-term wealth, right? Like everyone understands that it's not like a magic trick that you're suddenly going to make money if you make SIP, if you're doing recurring investments. Recurring investments help you move away from decision making, especially decision making that impacts our thought process and thinking in periods like these when our portfolios are in the red. So, if you continue to do SIP, you will continue to accumulate, reduce your average price so that over a longer period, as these prices recover and as most markets or most assets recover, you are in the green by a larger amount effectively.
The minimum amount of SIP one can do in crypto, and especially if you want to know about Bitcoin?
Yeah, as I said, like mudrex offers the ability to for users to do SIP. I've personally been doing an SIP every single day for the last 3 years now.
That one can do an SIP on?
You can just set up an SIP on the Mudrex app itself.
Okay.
You can set up a daily, weekly, monthly SIP. It's
So the
relatively
amount
straightforward.
can be what? Minimum amount can be what? 1,000 rupees, 500 rupees, what?
You can go as low as 10 rupees a day.
Okay. So the
Yeah.
so the upper level resistance now on Bitcoin is around 6870. That is what you're looking
Correct.
at.
Correct. So we are looking at resistance around 68, 70, somewhere in that range.
Okay.
And we are seeing strong support in the lower end in the 62, 63 range. That's where we are right.
All right. So for people who have done maybe a lump sum investment, if there is a little jump in the prices, do you recommend them profit booking?
No, I
No.
typically am the kind of a person who is typically risk off. I don't recommend doing active trading, especially in very volatile assets like these. I am personally a long-term investor, and that's what I recommend. I think that's the best way to create long-term wealth. Everything else, uh, it just ends up being regretful. Like there have been uh, so many stories that I have listened to over the course of the years that are effectively always regret stories. Like either I didn't exit early enough, I didn't
Yeah.
enter early enough, I should have stayed longer.
Yeah.
And it just seems like more decision making like this leads to more regret. And what you would rather do is minimize regret.
Yeah, but then what do you do when the prices are so volatile? I mean, you understand the asset class. Maybe you are in that kind of a business, but the retail
Yeah.
investor, I mean, they would panic. Their BPs would just shoot up. What to do during those times?
Absolutely. And which is why, like, in an asset class like crypto, you should tend to always keep lower amounts of your
Right,
investment.
right.
Like, aim to have between 2 to 5%. 2 to 5% is a small enough number so that it helps you understand where this asset class is growing, give you the outlier upside just in case this grows 5, 10x, and then limits your downside to 2 to 5% of your growth. Right?
Time to
2 to
accumulate?
5% is probably lesser than what most people will pay in taxes.
Absolutely. So it's time to accumulate now. Can we look at it that way?
We think that the bottom is near and accumulation has started to happen, and we
Okay.
think that this range is the range where accumulation will continue to be. We
Okay.
expect markets to be very similar most of March before we see broader recovery across April, May.
Okay.
That's
Okay.
like just looking at historical trends, April, May is the period when we should start seeing broader recovery.
All right, absolutely. I think we've covered a lot of it looking at the latest fall, but thank you so much for taking your time out and explaining all of this to our viewers who are especially interested in cryptocurrency today. Thank you so much, Edul. Thanks.
Thank you, Kavita.
And with that, it's time for a short break on the Money Show as well. But then post that, let's get you a financial planner who will be analyzing your portfolio and will help you achieve all your financial goals live.